Hello, everyone. Thank you for coming out today. My name is Ariel Bradford, and I'm the spokesperson for the Civil Rights Division. I'm here to give you your 2-minute warning. Today, you will hear from Attorney General Merrick Garland, Assistant Attorney General Kristen Clark for the Civil Rights Division, Executive Office of United States Attorney's Director Monty Wilkinson, Consumer Financial Protection Bureau Director Rohit Chopra, and Office of the Comptroller of the Currency Acting Comptroller Michael Su. Thank you for joining us today, and we'll get started shortly.
Good morning. I'm joined today by Assistant Attorney General for Civil Rights Clark, Director of the Executive Office for U.S. Attorneys Wilkinson, Director of the Consumer Financial Protection Bureau Chopra, and Acting Comptroller of the Currency Su. Welcome to the Justice Department's Great Hall. This space and this building that we are in were constructed at the height of the Great Depression in the early 1930s. At the same time that the federal government was constructing this monument to justice, it was instituting a profoundly unjust nationwide real estate practice known as redlining. Redlining is a process by which lenders deny services to individuals in a neighborhood because of the race or national origin of the people who live in those communities. Redlining has its roots in programs that were designed to make home ownership widely available for the American people, but that purposely excluded minority neighborhoods from accessing those benefits. Much has changed since the federal government engaged in Depression-era redlining, but discriminatory lending practices by financial institutions still exist. Unfortunately, redlining remains a persistent form of discrimination that harms minority communities. Lending discrimination runs counter to fundamental promises of our economic system. When people are denied credit simply because of their race or national origin, their ability to share in our nation's prosperity is all but eliminated. We are here today to announce that the Justice Department has launched an initiative to combat modern-day redlining. Along with our partners at the Consumer Financial Protection Bureau and the Office of the Comptroller of the Currency, we are also announcing our first settlement under the initiative and our second redlining settlement in the last 2 months. Redlining contributed to the large racial wealth gap that exists in this country. The practice made it extremely difficult for people of color to accumulate wealth through the purchase, refinancing, or repair of their homes. That discrepancy in wealth is clearly reflected in current home ownership rates. Today, a white family is 30% more likely to own a home than a black family. This present-day gap in home ownership rates is larger than it was in 1960. When lending institutions deny or avoid providing loans to minority communities because of the racial or ethnic demographics of the relevant neighborhoods, they contribute to these inequities. Such lending practices also violate federal law. The Justice Department has authority to investigate and file fair lending lawsuits under the Fair Housing Act and the Equal Credit Opportunity Act. These laws prohibit lenders from discriminating against customers on the basis of certain protected characteristics like race, religion, age, sex, and others. Today, we are committing ourselves to addressing modern-day redlining by making far more robust use of our fair lending authorities. Through the Justice Department's Combating Redlining Initiative, the Civil Rights Division will partner with the U.S. Attorney's offices. They will mobilize resources focused on making fair access to credit a reality in underserved neighborhoods across our country. The initiative represents the department's most aggressive and coordinated effort to address redlining. It will seek to address fair lending concerns on a broader geographic scale than the Justice Department has ever done before. The initiative will draw on and strengthen the department's existing partnership with the Consumer Financial Protection Bureau and with financial regulatory agencies like the OCC. Our work will be informed by strong outreach to consumer advocates, industry stakeholders, state attorneys general, and other agencies. Together, we will proactively seek to determine if lending institutions are engaged in redlining, and when fair lending violations are discovered, the Justice Department will act. We are wasting no time getting to work. The Civil Rights Division currently has several open redlining investigations, and through partnerships with U.S. Attorney's offices, the department expects to open more in the months ahead. And our efforts are already producing results. Today, we are pleased to announce our first settlement under the initiative and our second settlement in less than 2 months. The Civil Rights Division, working with the U.S. Attorney's Office for the Western District of Tennessee, the Consumer Financial Protection Bureau, and the Office of the Comptroller of the Currency, has reached a settlement with Trustmark National Bank. The agreement resolves allegations that Trustmark engaged in lending discrimination by redlining predominantly Black and Hispanic neighborhoods in Memphis, Tennessee. We commend Trustmark for its cooperation in swiftly resolving this matter. Through this settlement, Trustmark has shown an interest in remedying past practices and in promoting equal access to credit. We recognize that our initiative alone will not erase the full legacy of discrimination, but we will spare no resource to ensure that federal fair lending laws are vigorously enforced and that financial institutions provide equal opportunity for every American to obtain credit. To that end, you can expect more cases like the one we are announcing today. I will now turn the podium over to Assistant Attorney General Clark to provide more information about the settlement with Trustmark.
Thank you, Attorney General Garland. I am proud to be here today with you, Director Wilkinson, Director Chopra, and Acting Comptroller Hsu, to announce this unprecedented enforcement effort to combat redlining, one of the most long-standing and pernicious forms of lending discrimination. Redlining is alive and well, and it has had a lasting negative impact. For American families, home ownership remains the principal means of building wealth. Deprivation of investment in and denial of access to mortgage lending services has contributed to families of color persistently lagging behind in home ownership rates and net worth compared to white families. The extent of the disparities is staggering. The median family wealth of a Black family is $24,100 compared to $188,200 for a white family. That is about 7.5 times less. As the Attorney General said, the home ownership gap between white and black families is larger today than it was in 1960, before the passage of the Fair Housing Act of 1968. Ending redlining is a critical step in closing the widening gaps in wealth between communities of color and others. We have a duty to act now. Persisting racial inequality and widening wealth gaps makes clear that simply staying the course is not enough. We must take bold, new action if we are ever to eradicate redlining in our country and achieve the goal of equal opportunity. That is why we are launching the Combating Redlining Initiative now. The department analyzes several factors to determine whether a lender has engaged in redlining. We conduct statistical analysis on loan data and compare the lender's rate of applications and loans in minority neighborhoods to the lending of, quote, peer banks that are similar in terms of loan volume and profile. We also consider other factors, such as service areas that carve out communities of color, avoidance of minority neighborhoods when deciding where to place branches, and marketing efforts that largely avoid communities of color. We know that most lenders want to do the right thing and have taken efforts to expand credit to all communities. We commend those efforts, but if a financial institution is engaged in redlining, we will marshal our resources to root out the discrimination and stop it. U.S. attorneys' offices will act as force multipliers on this initiative, and we're pleased about the enthusiasm and commitment so many U.S. attorney districts have demonstrated in the course of developing this initiative. Their participation will ensure that fair lending enforcement is informed by local expertise on housing markets and the credit needs of local communities of color. Their understanding of demographic shifts and relationships with community groups have proven quite valuable in previous redlining investigations. Our partnership will allow us to analyze lending patterns by all types of lenders of all sizes, including non-depository institutions and credit unions. Our commitment to combating redlining is evident in the settlement against Trustmark. The resolution we achieved jointly with the Bureau resolved the government's allegation that Trustmark engaged in lending discrimination by redlining predominantly Black and Hispanic neighborhoods in Memphis, Tennessee. The bank is working now to improve its fair lending compliance and has demonstrated a commitment to the terms and goals of this settlement. Under the proposed consent order that we will be filing today, Trustmark will invest $3.85 million in a loan subsidy fund to increase credit opportunities for residents of predominantly Black and Hispanic neighborhoods in the Memphis area. Loan subsidy funds help level the playing field so that every qualified applicant has an equal opportunity to obtain credit. They will dedicate mortgage loan officers or community lending specialists to these neighborhoods and open a loan production office in a majority Black and Hispanic neighborhood in Memphis. Trustmark will devote $400,000 to develop partnerships that provide residents of majority Black and Hispanic neighborhoods in Memphis with services to help increase their access to residential mortgage credit. It will devote at least $200,000 per year to advertising, outreach, consumer financial education, and credit repair initiatives in and around Memphis. The department opened its investigation after one of Trustmark's regulators, the OCC, referred the matter. This settlement is the culmination of joint enforcement by the department and the Consumer Financial Protection Bureau, and I want to thank our partners for their work in securing this important resolution. Ensuring that lenders comply with fair lending laws is not just good law enforcement. The relief awarded in these cases expands financial opportunities for historically underserved residents in communities of color and also improves lenders' compliance management systems, expanding their lending opportunities and often leading to increased profits for the banks. This is a win for residents in redlined areas and for financial institutions. The Justice Department, working with our partners, is proud to launch this effort. Thank you.
Good afternoon. The Executive Office for U.S. Attorneys and U.S. Attorneys' offices from around the country are pleased to support this important initiative. U.S. Attorneys' offices play a critical role in protecting and promoting civil rights in their districts. Those efforts often involve close coordination with the Civil Rights Division. We are glad that such collaboration will be at the center of the Justice Department's increased efforts to combat redlining. Assistant U.S. attorneys will provide critically important perspectives to this broad national initiative. They not only know the local legal practices where cases will be filed, they also know the local neighborhoods that lenders might redline, and they have developed relationships with local groups that may have insights into the credit market in their districts. Most importantly, the relief the department obtains in redlining cases will have a significant impact on the communities our U.S. Attorney's offices serve. The recent settlement filed against Cadence Bank in the Northern District of Georgia and the settlement announced today in the Western District of Tennessee are just the beginning. Assistant U.S. attorneys have played a role in a number of the department's past fair lending investigations, and I'm proud that there are AUSAs across the nation who stand ready to join the Civil Rights Division in this broad effort to ensure equal access to credit. Thank you.
Thank you, Mr. Attorney General, and for all of you who are here. You know, it's been just around a decade since our economy crashed and destroyed trillions of dollars of wealth, and it was disproportionately those costs borne by communities of color. Out of the ashes was the creation of the Consumer Financial Protection Bureau, and one of the key priorities of the Bureau is to ensure fair lending and equal opportunity in our markets. You know, owning a home or a small business has long been a vehicle for creating wealth and neighborhood stability in our country. And many of our nation's policies of the past, like redlining, led to the exclusion of too many families and too many neighborhoods to have those opportunities. The impact of those policies continue to affect us today. You know, one 2018 study found the median value of a home in redlined areas is $276,000. That's $50,000 less than the $325,000 median value of homes in the surrounding areas. This gap demonstrates how the practice outlawed over 50 years ago has had a lasting impact on neighborhoods, on families, and the ability of the people who live there to achieve their dreams. Disparate homeownership rates are a major cause of wealth disparity in our country, as the Attorney General said. The difference in homeownership rates is unacceptable, and we must do something to combat it. In terms of how this plays out, the median wealth of a Black family, as the Assistant Attorney General mentioned, is roughly $24,000 compared to $188,000 for white families. If we allow racist and discriminatory policies to persist, we will not live up to our country's ideals. We need a fair housing market that is free from the old forms of redlining, as well as the new digital and algorithmic redlining. Today's action against Trustmark involved a form of redlining that, frankly, we've seen for decades. It's unacceptable, and a lender should not be able to discriminate against or discourage prospective applicants from seeking credit based on the neighborhood that they're from. The people of Memphis deserve better, and the people of our country deserve better. The CFPB will continue to do its part to end this form of redlining with our partners, but it is an endemic problem that requires all hands on deck, with enforcement from across the federal government, as you're seeing today, as well as our state, local, and tribal partners. Trustmark's conduct was egregious, but at the CFPB, we will also be closely watching for digital redlining, disguised through so-called neutral algorithms, but may in fact reinforce the biases that have long existed. You know, technology companies and financial institutions are amassing massive amounts of data on each and every one of us and using it to make more and more decisions about our lives, including loan advertising and underwriting. And while machines crunching numbers might seem capable of taking human bias out of the equation, that is not necessarily what is happening. Findings from academic studies and news reporting suggest serious questions about algorithmic bias. For example, a statistical analysis of 2 million mortgage applications found that Black families were 80% more likely to be denied when compared to white families with similar financial and credit backgrounds. The response of mortgage companies has been that researchers simply do not have all the data that feeds into the algorithms or the full knowledge of the algorithms. But their defense illuminates the problem. These algorithms are black boxes behind brick walls. When families and regulators do not know how decisions are made by these algorithms, we are unable to participate in a fair and competitive market free from illegal bias. Algorithms can help remove bias, but black box underwriting decisions are not necessarily creating a more level playing field and may actually be exacerbating the biases that feed into them. Given what we have seen in so many contexts, the speed in which banks and lenders are turning lending and advertising decisions over to these algorithms is concerning to me. Too many families were victimized in this country by robo-signing scandals from the last crisis, and we will not allow robo-discrimination to proliferate in a new crisis. We should never assume that algorithms will be free of bias, and if we want to move toward a society where each of us have equal opportunities, we need to investigate whether discriminatory black box models are undermining that goal, and we cannot have a new form of digital redlining. I'm so happy that the CFPB will contribute to all of these efforts in our all-of-government approach to rooting out all forms of redlining, including algorithmic ones. It's so good to be here, and I'm just so looking forward to all the work we're going to do together. Thank you.
It is an honor to be here today and to share this stage with our great partners at DOJ and the CFPB. As the regulator of our nation's largest banks and of community and mid-sized banks all across our great country, one of my highest priorities as acting comptroller of the currency is to ensure the banks we regulate provide fair and equitable access to credit to everyone. Fair access to credit builds wealth. When those doors are shut or simply made harder to open or pass through, minority and underrepresented groups can be left behind for generations. This inequality gap, this discrimination must end. The OCC has had a long history of strong partnership with the DOJ's Housing and Civil Enforcement section of the Civil Rights Division, referring potential fair lending violations and sharing our extensive examiner, economist, and legal findings as we did in the Trustmark matter. Today's announcement is important because it signifies the unified and unmitigated focus that each of our agencies has placed on the enforcement of the Fair Housing Act and the Equal Credit Opportunity Act. Our collective efforts are critical to addressing the discriminatory lending practices that create and reinforce racial inequity in the financial system. One last point as to why this all-hands-on-deck approach is so crucial. Anyone who works in the field of fair lending knows that modern-day redlining is not always about drawing red lines on a map. It is more often involves a bank simply creating barriers that limit lending services to certain groups or communities. This modern redlining, while equally pernicious, is often more subtle, harder to detect, and resource-intensive to find. It takes each of us marshaling all of our forces and resources to root it out and stop it. That is why I am proud to be part of DOJ's Combating Redlining Initiative announcement today, as it signals our continued efforts to remain strong partners in the fight against inequality in financial services.
So I just want to end by giving our thanks to our agency partners, giving our thanks to our intra-agency partners, and giving enormous thanks to those of you in this audience who are going to do the very hard work of ending this pernicious practice. And to everyone else, and to all of you, I hope you have a good afternoon. Thanks very much for coming.